Hey, everybody, welcome to the live stream. We are going to view and listen to the Adobe earnings call. And then once they get done with their presentation and when they get to questions from the analyst, I'm going to present my research, analysis, and my valuation on Adobe. And I've completed it, got it ready, but I wanted to listen in on what management has to say, and then we'll get to my research probably in about 15, 20 minutes. And I'm going to go ahead and turn on the audio from their earnings announcement now. Looks like the audio hasn't started just yet, so we'll see when they get started.
Adobe Acrobat Studio is all new. What can PDF spaces with AI do? Drag in research, drop in thoughts. AI pull insights from your docs. Got the data? Do a recap. Generate a slick graph ASAP. You did your thing. It's time to share. And let your team build from there. Ideate, generate, do it real quick. Let AI assistants do the trick. All wrapped up? Yeah, you won. Do that, doing that, did that, done. Now you can do that with Acrobat. Now you can do that with the all-new Acrobat.
Hey, what's up, everybody? Terry White here, and today I'm not only dropping knowledge, but I'm dropping bananas into Photoshop with a sneak peek of Nano Banana, a partner model, coming to Photoshop beta in a couple of weeks. Let me show you how it works. All right, let's start with a scene that I shot in studio. I wish I had him facing forward, but now with Nano Banana, that's pretty easy to do. Just make a selection of the whole scene, type in my prompt to not only remove the glare from his glasses, but have him face forward. And like magic, he's been turned, something I couldn't have done easily before. So now I'll just go ahead and drag that layer into the scene that I want him in. That will create an extra layer in this scene for me, and now I can begin my compositing workflow. So I'll go ahead and scale them down, get them into place, and then once I scale it down to the appropriate size, the next thing I'll need to do is remove the background. That is one click on the contextual taskbar. That will create a layer mask, and great, the background's been removed. Next up, I want to harmonize this. So this is a new feature in Photoshop, public beta, that will harmonize the layers and make the colors and shadows and lighting look right. But I still want to brighten it up just a little bit with that creative control that I have. And so now using the object selection tool, I'll select him as an object with one click and then head over to my layers panel and add an exposure adjustment layer. And just like magic, I can adjust the exposure of just him without affecting the rest of the scene. Now that I got him looking good, the next thing I need to do is put his name up on the marquee. So I'll make a selection using my selection brush. And thanks to Nano Banana, I can go ahead and edit that text with a prompt. Now, if you've ever tried to do this kind of work inside Photoshop, you know how hard it would be to replace that text. But I'll just type it in, replace the text with his name, Jimmy Slays, and just like magic, we can have Nano Banana replace that text for us. And there it is, my completed composite, thanks to our new partner model. How cool is that? Be sure to stay tuned for Nano Banana coming to Photoshop beta in a couple of weeks. Cheers, everyone. Thanks for watching. Catch you in the next one.
Looks like they took the opportunity to play us a nice little commercial.
Welcome to the Q3 FY25 Adobe Earnings Conference Call. Today's conference is being recorded. At this time, I'd like to turn the conference over to Doug Clark, Vice President, Investor Relations. Please go ahead.
Good afternoon, and thank you for joining us. With me on the call today are Shantanu Narayan, Adobe's Chair and CEO, David Wadhwani, President of Digital Media, Anil Chakravarthy, President of Digital Experience, and Dan Dern, Executive Vice President and CFO. On this call, which is being recorded, we will discuss Adobe's third quarter fiscal year 2025 financial results. You can find our press release as well as PDFs of our prepared remarks and financial results on Adobe's Investor Relations website. The information discussed on this call, including our financial targets and product plans, is as of today, September 11, and contains forward-looking statements that involve risk, uncertainty, and assumptions. Actual results may differ materially from those set forth in these statements. For more information on those risks, please review today's earnings release and Adobe's SEC filings. On this call, we will discuss GAAP and non-GAAP financial measures. Our reported results include GAAP growth rates and non-GAAP growth rates, including constant currency rates. During this presentation, Adobe's executives will refer to constant currency growth rates unless otherwise stated. Non-GAAP reconciliations are available in our earnings release and on Adobe's investor relations website. I will now turn the call over to Shantanu.
Thanks, Doug. Good afternoon, everyone, and thank you for joining us. Adobe had another strong quarter and delivered double-digit top-line growth and profitability. In Q3, we achieved record revenue of $5.99 billion, representing 10% year-over-year growth. GAAP earnings per share for the quarter was $4.18, and non-GAAP earnings per share was $5.31, representing 14% year-over-year growth. AI represents a tectonic technology shift and presents the biggest opportunity for Adobe in decades. Our strategy to harness AI is focused on infusing it across our category-leading applications to provide more value and delivering innovative new AI-first products. We've done a great job executing this strategy by accelerating innovation with a focus on offering greater value to creative and marketing professionals and business professionals and consumers. Creativity has always been core to the company's mission. We're infusing AI across our flagship Creative Cloud applications, including Photoshop, Illustrator, Premiere Pro, and After Effects, and delivering new offerings for next-generation creators with Adobe Firefly across web and mobile. We're delivering an end-to-end ideation to creation solution in the new Firefly application to make it the single destination for creators' workflows. It includes our own first-party commercially safe models and leading third-party models. We are seeing strong adoption of the standalone Firefly subscription offering. We recently added Google Gemini Flash 2.5 alongside Google's Veo and Imagen models to the roster of partner models from OpenAI, Black Forest Labs, Runway, Pika, Ideogram, and others. In the rapidly evolving AI landscape, where each generative AI model has its own aesthetic style, we're offering customers choice and flexibility to use the right model within Adobe applications without the friction of switching between workflows and platforms. AI is now deeply integrated across our flagship applications in Creative Cloud, giving creators everything they need to bring their creative visions to life all in one workflow. We're seeing strong adoption of the Creative Cloud Pro offering, which includes Firefly, reflecting the value professionals see in having AI integrated with power and precision creative tools. Simply put, Adobe is the operating system for creative work. Adobe combines creativity and marketing in the enterprise, offering the most differentiated solution to serve the growing needs of creative and marketing professionals. Adobe Gen Studio is the most comprehensive solution that brings together workflow and planning, creation and production, asset management, activation and delivery, and reporting and insights to enable marketing automation with AI in the enterprise. Our Workfront, Frame, AEM assets, Firefly services, and Gen Studio for performance marketing products, which are key components of the integrated Gen Studio solution, now exceed $1 billion in ARR, growing over 25% year over year. Customers are leveraging the rich data and customer knowledge in Adobe Experience Platform to enable agentic workflows to scale the capabilities of Adobe's category-leading customer experience orchestration applications. We're seeing continued adoption and momentum for Adobe Experience Platform AI Assistant, with 70% of eligible AEP customers leveraging this functionality. As AI transforms consumer behavior, it's reinventing marketing and customer experience. Brand discovery is shifting from primarily search to include generative engine optimization. AI becomes the new UI, guided by conversations rather than menu clicks. Brands must deliver hyper-personalized, immersive experiences on own channels to drive engagement and loyalty. In this new reality, Adobe uniquely offers an integrated customer experience platform that delivers automation, agility, and scale. The explosion of content creation and automation in the enterprise and the beginning of new marketing needs, such as LLM optimization and LLM advertising, are a massive opportunity for Adobe. We're infusing AI into Adobe Experience Manager with our upcoming LLM Optimizer release, a powerful agentic app to improve brand visibility, drive acquisition, and maintain engagement with customers across LLM platforms. For business professionals and consumers, we're integrating creativity with productivity for billions of users with the recent launch of Acrobat Studio, which brings together Acrobat and Express. PDF has been the global standard for digital documents for over 30 years and continues to grow. We're evolving Acrobat from a leading document productivity app to a first-of-its-kind destination for people to get insights faster, create standout content, and collaborate more seamlessly. The new Acrobat Studio includes PDF Spaces, which transforms collections of PDFs, web pages, and other files into dynamic knowledge hubs that help people work smarter and faster using AI Assistant to derive insights. We're seeing steady growth across our family of Acrobat and Express products, with combined monthly active users growing approximately 25% year over year. Adobe is the leader in the AI creative applications category. Our AI-influenced ARR has now surpassed $5 billion, up from over $3.5 billion exiting fiscal year 2024, and we've already surpassed our full-year AI-first ending ARR target. Given our customer-focused growth strategy, product innovation, and strong go-to-market execution and the momentum in our business, we're pleased to once again raise our FY25 revenue and EPS targets. I'll now turn it over to David and Anil to discuss the momentum in our business.
Thanks, Shantanu. Hello, everyone. In Q3, digital media achieved revenue of $4.46 billion, which grew 11% year over year. We exited the quarter with $18.59 billion of digital media ARR, growing ending ARR 11.7% year over year. Our business professionals and consumers customer group had another strong quarter. The introduction of Acrobat AI Assistant brought a new conversational interface that enhances the experience of customers consuming PDFs. This unlocks increased comprehension across trillions of PDFs in the world. We continue to see accelerated use of AI Assistant across desktop, web, and mobile. Our vision is to harness the power of generative AI and conversational experiences to fundamentally reshape how knowledge is discovered, synthesized, and shared. We're executing on our strategy to extend the role of PDF and Acrobat by delivering a cohesive experience that empowers individuals to effortlessly move from content consumption in Acrobat to content creation in Express. We've expanded our strategy with the introduction of PDF Spaces, a new foundation for content consumption and creation. PDF Spaces reimagines how people work with documents, transforming static files into dynamic collaborative knowledge hubs. Users can leverage PDF Spaces to organize documents and links, discover insights faster through conversational experiences, and enable editing and remixing of PDF content into new formats like emails and presentations. I'm particularly excited that anyone can easily create agents to perform document tasks on their behalf. Customers can use PDF Spaces with team members for more impactful knowledge sharing and collaboration. The combination of PDF Spaces, AI Assistant, and an integrated Express experience is available through Acrobat Studio, a new premium offer in our Acrobat lineup. Early reception of Acrobat Studio has been strong, with encouraging adoption and usage trends that highlight the significant customer demand and opportunity ahead. We're seeing rapid adoption of Adobe Express. In the enterprise, Express is helping organizations scale content creation while maintaining brand consistency and quality. A great example is Dentsu, which has made Express a core part of its global marketing strategy. Adobe's platform is being rolled out to all 68,000 employees worldwide and scaled across brands including Carrot, iProspect, Dentsu X, Dentsu Creative, Tag, and Merkle. By enabling creative teams to build content in Creative Cloud and share that content through Express within an overall GenStudio solution, Dentsu ensures brand alignment across global teams while empowering marketers to create and remix their own content. This is driving measurable impact at Dentsu. Other business highlights include ending units of Acrobat AI Assistant grew more than 40% quarter over quarter, and AI Assistant engagement with conversations and summarizations grew nearly 50% quarter over quarter. Acrobat Mobile ending ARR grew more than 30% year over year. Over 14,000 organizations added Express in Q3 alone, a 4x increase in the quarter versus a year ago. Express usage within Acrobat nearly doubled quarter over quarter. New Express integrations in Q3 include LinkedIn, Miro, and Premier League. Over an 80% year-over-year increase in the number of students with access to Express Premium plans. We signed a partnership with the state of California to help prepare high school and college students across the California State University system for careers in AI by providing them with access to Express, Acrobat AI Assistant, and Firefly. Key customer wins include Allegis Group, DSV, FedEx, Intuit, KKR, Lloyds Bank, Lockheed Martin, Provincial Government of Ontario, the State Government of Virginia, and Vivendi. Our creative business had a strong quarter. Creativity has never been more important, and we continue to lead by delivering the next generation of innovations to empower creative professionals and creators. As demand for content accelerates, our strategy is centered on making creativity more accessible, more intelligent, and more impactful. We're doing this by deeply integrating AI into our flagship applications, expanding creativity through new apps like Firefly, and providing powerful automation to help customers scale their work. Together, these innovations are transforming how ideas move from inspiration to execution and helping our customers create with greater speed, efficiency, and imagination. We are continuing to infuse AI into our flagship applications like Photoshop, Premiere Pro, and Illustrator to help onboard new users more quickly and make existing users far more productive. Recent examples include the addition of a new Harmonize feature in Photoshop that blends composited objects with the image by automatically adjusting lighting, colors, and shadows. Harmonize has quickly become one of the most used features in Photoshop. We released Project Turntable, a popular sneak from Max last year, into Illustrator, which helps users rotate their 2D artwork to accurately visualize different angles, eliminating a frequent and time-consuming task. Innovations like these directly translate into measurable value for customers by cutting production times, enabling more content output, and raising the overall quality of creative work, and have driven strong migration to our new Creative Cloud Pro offer. The Firefly app is a powerful yet accessible AI production studio that helps creators deliver original content faster than ever before. In Q3, we added a slew of new capabilities, including avatar generation, sound effects generation, and updates to the growing list of integrated generative models. Firefly provides access to Adobe's commercially safe generative AI models, alongside a growing list of leading third-party models, including Google's Imagen, Veo, and Gemini Flash 2.5, OpenAI's GPT Image, as well as Flux, Runway, Ideogram, Pika, and Ray 2, to name a few. This is enabling the Firefly app to be the go-to destination for content generation and editing for both creators using Adobe products for the first time, as well as creative professionals who have been using Creative Cloud applications for years. We're delivering incredibly powerful automated content production capabilities through Firefly services to enterprises of all sizes and across all verticals. These agentic services leverage custom models to automate and personalize image, video, and 3D content for marketing campaigns, ad creation, and post-production video work, all while maintaining brand consistency. Additionally, we delivered a no-code interface that extends the power of Firefly services to studio and design teams. Firefly services are available through GenStudio, as well as to individuals through Firefly app subscriptions. Consumption of Firefly services and custom models grew 32% and 68% quarter-over-quarter, respectively. Other business highlights include continued new user acquisition of Creative Cloud with particular strength in emerging markets like India, which grew ending units 50% year-over-year. Millions of downloads of the Firefly app for mobile since launch. Firefly app MAU grew 30% quarter-over-quarter. Firefly app continues to attract next-gen creators, with first-time Adobe subscribers through the app growing 20% quarter-over-quarter. Generative AI consumption accelerated with 29 billion generations, and video generations growing nearly 40% quarter-over-quarter. Key enterprise wins include Disney, FedEx, Home Depot, Meta, MetLife, Stagwell, Ulta, and Volkswagen. We're excited to welcome our community at Adobe Max next month. We'll showcase incredible innovations that highlight amazing productivity features in our flagship Creative Cloud applications, breakthrough AI capabilities leveraging Firefly and third-party models, new agentic experiences for conversational editing, and significant strides in content production automation for enterprises. Max is always a celebration of the community's creativity, and we look forward to sharing how Adobe Magic is transforming creative workflows and unlocking new opportunities. I'll now turn it over to Anil.
Thanks, David, and hello, everyone. Digital Experience had a strong Q3, achieving revenue of $1.48 billion for the quarter. Subscription revenue in the quarter was $1.37 billion, representing 11% year-over-year growth, making us the largest software provider in our category. Our success has been driven by having the most comprehensive solution for digital marketing and customer experience, enabling the world's largest brands to deliver personalized experiences at scale. AI is changing consumer behavior and transforming how businesses engage with consumers. Our most recent Adobe Digital Index data, which is based on online transactions across over 1 trillion visits to U.S. retail sites, shows that LLM traffic grew 4,700% year-over-year in July 2025. The rapid changes in consumer behavior and expectations in the era of AI are forcing brands to reinvent marketing and customer experience. Customer acquisition is being disrupted as brand discovery shifts from link-based search results to include LLMs. Brands need to win visibility through LLMs by providing machine-readable content and real-time updates while strengthening their direct relationship with their consumers. With the rise of conversational interfaces, consumers increasingly expect that they can accomplish any interaction with a brand through a single interface. Hyper-personalization and immersive experiences will attract consumers to owned channels like websites and mobile apps, enabling brands to drive deeper customer engagement and loyalty. Enterprises need an end-to-end integrated customer experience orchestration platform to achieve the scale, automation, agility, and efficiency required in the era of AI. Adobe is uniquely positioned to help businesses orchestrate and deliver personalized customer experiences by fusing creativity, marketing, and agentic AI. Our AI-first and AI-infused solutions spanning GenStudio for content supply chain, AEP and apps for customer engagement and loyalty, and Adobe Experience Manager and LLM Optimizer for brand visibility and discovery enable us to power customer experience orchestration in the era of agentic AI. We're seeing accelerating adoption and usage of Adobe GenStudio, the most comprehensive content supply chain solution, as enterprises drive content velocity with AI. New capabilities in Adobe GenStudio for performance marketing are accelerating video and display ad campaign creation. Marketers will be able to produce engaging short-form video ads using the commercially safe Firefly video model. We release new capabilities for display ad campaigns, including on-brand image generation with Firefly, as well as offerings with Amazon Ads, Google Campaign Manager 360, LinkedIn, and Meta to power seamless campaign workflows. We are innovating on our leading AEP marketing and customer experience platform with built-in agentic functionality, empowering marketers to deliver digital experiences with greater agility and efficiency. Our intelligent agents understand intent, reason, and recommend actions to drive outcomes across content, data, and journeys. Purpose-built agents are embedded in our core apps and new AI-first applications, helping brands unlock greater efficiency and precision, automate workflows, and personalize experiences at scale. We launched the first phase of AEP Agent Orchestrator in Q3, empowering businesses to build, manage, and orchestrate AI agents from Adobe and third parties. These capabilities power the Data Insights Agent and Product Support Agent, which are generally available now, and add to our growing portfolio of agents. Our newest innovation is Adobe LLM Optimizer, available in early access. As customers and prospects increasingly turn to generative AI search and assistance for brand discovery, LLM Optimizer helps shape how brands show up in results, which is driving influence, visibility, and qualified traffic. Other business highlights include strong demand for AEP and native apps, with Q3 subscription revenue growing over 40% year over year. Continued adoption and momentum for AEP AI Assistant, with 70% of eligible AEP customers using AI Assistant. Expanded partnership announcements at Cannes, including Accenture, Dentsu, IBM, Infosys, Omnicom, and Publicis. Industry analyst recognition, including being named a leader in 2 Forrester Wave reports for customer data platforms for B2B and digital analytics solutions, as well as 2 IDC MarketScapes for worldwide AI-enabled marketing platforms for enterprise and mid-sized customers. Strong 60% year-over-year growth in cross-cloud deals, demonstrating the value of the Adobe integrated platform, including GenStudio. Over 40% of our top 50 enterprise accounts doubled their ARR spend since the start of FY23. And key global customer wins, including Amgen, Australia Post, Dick's Sporting Goods, Disney, FedEx, Intuit, Lloyds Bank, Macy's, MetLife, Microsoft, Morgan Stanley, Qatar Airways, and Stagwell. We are excited to showcase our latest innovations, including AI-first apps and AI-infused products at MAX next month. These advancements further strengthen our position as the leader in customer experience orchestration in the era of agentic AI. I'll now pass it to Dan.
Thanks, Anil. Today, I'll start by summarizing Adobe's performance in Q3, fiscal 2025, highlighting growth drivers across our businesses, and I'll finish with our targets. In Q3, we exceeded our targets and once again delivered double-digit top line and EPS growth. We're driving demand by infusing AI into our category-leading solutions, as well as delivering new AI-first products across business professionals and consumers, creative professionals and creators, and marketing professionals. Adobe achieved revenue of $5.99 billion, which represents 11% year-over-year growth as reported, or 10% in constant currency. GAAP diluted earnings per share in Q3 was $4.18, and non-GAAP diluted earnings per share was $5.31, reflecting 11% and 14% year-over-year growth, respectively. Adobe AI-influenced ARR surpassed $5 billion, and we expect it to continue to rise as a percent of our business. Notably, ARR from our new AI-first products, including Firefly, Acrobat AI Assistant, and GenStudio for performance marketing, has already achieved our end-of-year target of over $250 million. Third quarter business and financial highlights included digital media revenue of $4.46 billion, digital media ending ARR of $18.59 billion, growing 11.7% year over year, digital experience revenue of $1.48 billion, cash flows from operations of $2.20 billion, which is a record for Q3, and exiting the quarter, remaining performance obligations were $20.44 billion, growing 13% year over year, or 12% in constant currency, and CRPO growing 10% as reported and in constant currency. In our digital media segment, we achieved 12% year-over-year revenue growth as reported, or 11% in constant currency. We exited the quarter with digital media ARR growing 11.7% year-over-year in constant currency, driven by strong demand for higher value AI-infused offerings, including Creative Cloud Pro and Acrobat, as well as AI-first products, including Firefly and Acrobat AI Assistant. Within digital media, Q3 growth drivers for business professionals and consumers included monthly active users of Acrobat and Express grew approximately 25% year over year, fueling our freemium growth strategy. Strong usage and monetization of our Acrobat offerings, including AI Assistant and our newly launched Acrobat Studio. A 4x increase in businesses adding Express in the quarter versus a year ago. Robust performance in the education sector driven by access to Express, Acrobat AI Assistant, and Firefly for students, faculty, and staff. And strong ARR book of business growth across all routes to market and geographies. Within digital media, Q3 growth drivers for creative professionals and creators included increasing demand and usage of AI innovation in our flagship applications like Photoshop, Premiere Pro, and Illustrator as part of our new Creative Cloud Pro offering. Strong new subscription adoption of the Firefly app by individuals and Firefly services by enterprises. Support of Firefly and third-party models in Creative Cloud applications drove accelerating generative AI usage quarter over quarter, and strong ARR book of business growth across all routes to market and geographies. Turning to our digital experience segment, in Q3 we achieved revenue of $1.48 billion, which represents 9% year-over-year growth as reported and in constant currency. Digital experience subscription revenue was $1.37 billion, growing 11% year-over-year as reported and in constant currency. Within digital experience, Q3 growth drivers for marketing professionals included AEP and apps ending ARR growing greater than 40% year over year as enterprises focus on delivering personalization at scale for customer engagement. Strong adoption of AEM, including Sites Optimizer, as marketers increase relevancy of their owned websites across both search and LLM platforms. Increasing demand for Gen Studio, our comprehensive content supply chain solution, as enterprises drive content velocity and AI automation. Continued strength in customer retention and expansion, and strong execution in deals over $1 million across key verticals and geographies. Our growth strategy is focused on serving the diverse needs of our customers across both business professionals and consumers, and creative and marketing professionals. As we previously outlined, our continued success will be driven by orienting our innovations, offerings, monetization models, and go-to-market around our customer groups. For the business professionals and consumers group, subscription revenue was $1.65 billion, which represents 15% year-over-year growth as reported, or 14% in constant currency. For the creative and marketing professionals group, subscription revenue was $4.12 billion, which represents 11% year-over-year growth, or 10% in constant currency. In the enterprise, at the intersection of creativity and marketing, Adobe's integrated and AI-infused solutions are transforming the entire content supply chain to address digital content workflow and planning, creation and production, asset management, delivery and activation, and reporting and insights. This massive market represents an opportunity to drive both creative seat and ARPU growth, as well as demand for our content production and marketing automation solutions. We are driving strong adoption of our automation solutions in the enterprise with Gen Studio. Our Workfront, Frame, AEM assets, Firefly services, and Gen Studio for performance marketing products, which are key components of the integrated Gen Studio solution, now exceed $1 billion in ARR growing over 25% year over year. In the enterprise, we delivered over 60% year-over-year growth of One Adobe deals, reflecting cross-cloud adoption and deepening strategic partnerships with our customers. In addition, historical subscription revenue for these customer groups is available in the Adobe Investor Relations data sheet under supplementary customer group data dating back to FY23. Turning to other financial disclosures, Adobe's effective tax rate in Q3 was 19.0% on a GAAP basis and 18.5% on a non-GAAP basis. Our cash flow from operations in the quarter was a Q3 record of $2.20 billion, and ending cash and short-term investment position exiting Q3 was $5.94 billion. In Q3, we entered into a share repurchase agreement totaling $2.50 billion, and we currently have $8.40 billion remaining of our $25 billion authorization granted in March 2024. Let me now turn to our financial targets, which assume current macroeconomic conditions. In Q4 FY25, we are targeting total Adobe revenue of $6.075 to $6.125 billion, digital media segment revenue of $4.53 to $4.56 billion, digital experience segment revenue of $1.495 to $1.515 billion, digital experience subscription revenue of $1.395 to $1.410 billion, GAAP earnings per share of $4.27 to $4.32, and non-GAAP earnings per share of $5.35 to $5.40. For Q4, we expect non-GAAP operating margin of approximately 45.5% and a non-GAAP tax rate of approximately 18.5%. Based on our momentum, we are pleased to raise our digital media ending ARR growth target. And given our Q4 targets, we are raising the full year total revenue and GAAP and non-GAAP EPS targets. For FY25, we are now targeting total Adobe revenue of $23.65 to $23.70 billion, digital media segment revenue of $17.56 to $17.59 billion, digital media ending ARR book of business growth of 11.3% year over year, digital experience segment revenue of $5.84 to $5.86 billion, digital experience subscription revenue of $5.39 to $5.41 billion, GAAP earnings per share of $16.53 to $16.58, and non-GAAP earnings per share of $20.80 to $20.85. In summary, Adobe's Q3 performance demonstrates strong execution in an AI-first world. Our focus on product leadership and customer-centric innovation positions us to deliver durable and profitable growth. We are excited to see customers adopt and utilize our comprehensive suite of differentiated AI-first and AI-infused solutions. Looking ahead, I'm confident that our investments and strategic focus will deliver long-term shareholder value. Shantanu, back to you.
Thanks, Dan. I'm extremely energized by my constant engagement with our world-class product teams and excited about our innovative roadmap to deliver Adobe Magic to an ever-increasing number of customers. In my interactions with companies around the world, it's clear that they're investing in Adobe as their mission-critical creative AI technology partner. I look forward to seeing you at Adobe Max, where we will showcase incredible innovations across creativity, marketing, and AI, and host an investor Q&A session. Thank you, and we will now take your questions. Operator?
All right. So this is a good time. They're going to take questions, and we'll see. I think the stock may move based on some questions. Hopefully they press them on a couple of things, including do they have pricing power now that they have AI infused in their product? I'd like to see that. That's important because they're making a larger investment into AI. They should be able to get a better price. And I do like the growth. The growth has been expanding, increasing. The percentage growth, what shouldn't be lost about Adobe is they're getting bigger. And as you get bigger, this percentage growth is supposed to come down, but they've been accelerating that number. Very good. They're up to 11%. That's very good. That shows that customers like the Adobe products, and potentially Adobe's increasing their price on those products. So that's good. So revenue was good. Earnings per share were very good. And the free cash flow numbers were very good. So let me show you my valuation of Adobe. I've completed all these numbers. I'll kind of take you through my research here. And I value companies, for those that are new to my channel, I value companies on a forecast of free cash flows, bringing that forecast to a net present value in today's, for today, and then comparing it to the stock price. I also look at the net present value of earnings per share. So let me take you through that. So their cash flows are very consistent, and they increased nicely with the report they just dropped. So my cash flow pretty much stays on the path it was on before. I've been tracking Adobe for years, and this was easy to update because it's pretty much in line. Some changes that I made to my overall valuation. I stayed with a 10% growth rate, even though they're growing at 11%, just to be conservative. I did change the discount rate. We're seeing a period of lower interest rates. And as interest rates drop, the discount rate we use to value stocks is going to come down, which makes stocks more valuable because you can't get a good yield out of bonds. So investors are more inclined to invest in stocks. Now, the net present value of all the cash flows I expect, and Adobe, one thing they are is very consistent, reliable. They just execute and deliver growth, profit, cash flow. And the net present value of all those cash flows in the future is $325 billion. I add the cash on the balance sheet, take away debt, and I get to an equity value in the business of $325 million. The market cap of the business, based on shares outstanding, I brought down the number based on the shares they repurchased. And I did want to show the schedule, I'll show it later, of how they've bought back shares, which is very good. That's the recipe of success for Apple and other businesses that are reducing share count and making the remaining shareholders bigger owners of the business, or each shareholder's fraction is a little bit bigger. So that's really good. The cash flows are just quite a bit more valuable than the current stock price. Now, why is this stock discounted so much? I think a few of you have already noted it, which is AI. AI is either going to be a threat or it's going to be an opportunity to businesses. And I think more recently, the market has behaved as if AI is going to be a threat to Adobe. I don't agree with that. I think Adobe can take AI, make their products more attractive, more popular, and increase prices. So we'll see how that plays out. I think it's going to play out with Adobe becoming bigger and bigger and bigger and more profitable. But the market is concerned that, is AI going to get rid of Adobe? Now, if you think about, OpenAI has been out for over 2 years, and so has Gemini and Meta. And you can go on those sites and you can generate images. You certainly can. Now, when I use those AI apps, none of the images it renders are useful. Maybe 1 out of 10 or 20. Usually the images that get produced are okay, but not really useful. I can usually get further ahead just by looking at images on Google search and just grabbing images that way. But if you're a creative graphic artist, you're going to use Adobe. It's the professional's tool. It's like a plumber shows up to do a professional job. They have plumber's tools that are more expensive than the stuff that I would buy at Home Depot. So that's why the stock is discounted, is the market's not sure if AI is a threat or an opportunity for Adobe. I look at the growth of the company growing at 11%. They're already a very large company. And I am of the opinion that it's an opportunity. When you look at their profitability, they continue to be profitable. And when I take their earnings per share, give them just a 24 PE. This is a growing business, 11%, but I'll be conservative with a 24 and grow their profits by 9% going forward. The net present value of the stock, if I use an earnings per share valuation, is 35% higher than the current stock price. So it's being discounted by 35%. I like to blend these two numbers, and I take more weight in free cash flow method because that's what Warren Buffett and a lot of these famous investors do. I get a 49% discount on a quality business that's really executing well. One more thing that I wanted to put out there, software companies will be measured by the rule of 40. What that means is you take your revenue growth plus your net income, your profitability, your net profitability. And if you're over 40, it is a good company. It is a valuable company. It shows that, hey, they are relevant, they're growing. And the size of the company is important to consider. Adobe is a large company growing at 11%. I really appreciate that. I think it's an opportunity, and they're very profitable. Their products are desirable, so they have pricing power and they can make good money on their revenue. So overall, I think the stock is discounted by 49%. When we look at the stock and how it's behaved over the last couple of years, the 1 year looks like, this stock should be in negative revenue growth rate, right? Not growing at 11%. It should be like fully tanking, like, oh no, revenues are going down year after year, but no, they're going up. Profitability is there, free cash flow is there. So I think the market may have it wrong on Adobe. The market had the stock sell off in 2022, along with all stocks that were selling off in 2022, right? Everything was selling off. It was a bad year, it was a bear market. And it came back. Coming out of 2022, the stock rose nicely up to $634 a share. But the story that AI could be a threat to Adobe has really taken a lot of investors away from Adobe. And it's actually attracted investors like myself that see this as an opportunity. And I started to buy into the stock. So I'm a buyer of Adobe. I think it's, I know some comments were out there and I respect them that it could be a value trap. It most certainly could be classified as that, but value traps don't grow. They don't grow top line revenue. They usually are stagnant on the top line. And Adobe's growing at 11%. That's similar to the growth rate that Google has, similar to the growth rate that Amazon has. That's a very respectable growth rate of 11%. So I'm good owning Adobe and buying more shares, and we'll continue to buy shares of Adobe. The stock is up 3% in after hours. This stock has been unpredictable from a stock price perspective the day after. It's sold off quite harshly on previous occasions. We'll see if that happens again. I'll wait till 9 a.m. Tomorrow before 9 a.m. Pacific before I could say, okay, Adobe's rising or falling, because I want to I want to see it first mentality on this one, because it's surprised me a few times. I just find it a little bit hard to believe that the market after Adobe, and let's look at the quarterly. This isn't taking into account the quarter we just got closed, but you look at this growth, 10, 10, 11, 10, 10, and we just had an 11. So a company that's under threat, you should see this percentage growth be affected and go down. It's not. And they're growing a bigger number year after year. This company in 2018 was 9 billion. Now they're 22.6 billion, not even including the latest quarter. So they're probably going to be closer to 23 billion. When you have a company go from 9 to 23 billion, that shows a company's getting more customers, increasing the price that they charge for their product. They're increasing their revenue. That's a very good signal that it's a healthy, relevant business that has power in their market. And I happen to think that Adobe is number one in their category of creative software. I can't think of another company that I put ahead of Adobe. I think Adobe in that, segment of the market for software is the leader. So that's my research on Adobe along with my valuation. I hope you find it interesting. It's great to have this many people attend the call. Thank you. Looks like we have some questions and I'm going to try to get to them, but keep in mind, I'm a one-person operation. I apologize if I miss your comment. So Dual and Adobe, yeah, they're not the same. Duolingo does learning and you can learn a language and stuff on Duolingo, and Adobe is creative arts. So if you want to create a video, if you want to create a really nice graphic and so forth, you use Adobe. So Killer Rabbit. All right. So let's see here. Yeah, we'll see. I think that AI is going to be integrated in their product. We'll see how that makes their product more attractive. And hopefully they can charge more money for their Adobe software. We'll see. All right, we got somebody from Italy. Welcome. I visited your beautiful country in 2023 and had a great time. And you bought 30 shares yesterday. Nicely done, sir. Hopefully you're making money already. Yeah, and I agree with you that every professional uses Adobe. It's just like, like I was using the analogy of a electrician or a plumber. Those guys buy tools that are going to last, and they're usually like just really good tools that cost more money. And Adobe's kind of like that. It's an expensive suite of products, but if you want to put out work that is, professional and really you put out your best work, you use Adobe. If you want to do it on the cheap, you certainly can, but it's not going to look like an Adobe created end product. All right. So yeah, so you're going to buy, Andre, for the long term. That is great. Cool. And I own both Duolingo and Adobe. To me, they're two different investments because Duolingo is a small company. Adobe is a very well-known company. Professionally, right, in industry, it's a known commodity. It's like a blue chip stock. Well, Duolingo, I own Duolingo and it could be something, but it's a small stock and it could be disrupted by a bigger player. Let's see how that stock performs over time. Yeah, I hope they press them on, is AI going to enable you to create new products that customers would then have to buy, or maybe a premium option on a product, or how is it going to increase your revenues, is that in essence what I want to know. And they haven't had to put a ton of additional capital into their AI development. I think they just put their developers to create those AI experiences within their product. And I'm saying that based on my review of their financials and based on my review of their cash flow statement. All right. So yeah, I'd love to see Adobe get up to $500 a share. I think it can. We'll see. Some software stocks have performed nicely recently. I mean, Oracle was up a ton yesterday, right? That's officially a software company. Don't know that it's going to go up 30. Adobe's going to go up 36% like that, but hopefully we see it run up. I think CRM was up today, and a couple other software stocks. Duolingo was up nicely today, and so did Zeta. I don't know if you guys follow Zeta, but it was up 10%. So some software companies were making a move today. Hopefully they continue to rise. All right. So I think I caught most of them. Thanks so much, everybody, for joining. Oh, we got more comments. All right. Let me get to the new comments now. Maddie, thanks for joining. Team PJCT. Which is a better hold, Adobe or PayPal? I would say Adobe based on revenue growth. PayPal is not growing a whole lot. That's been one of the frustrations around PayPal. When you look at PayPal's growth, you're at 4%, 6%, 8%, and it's been a little inconsistent. Where when you go to Adobe, I mean, this is like just getting it done. They're getting bigger and their percentage growth is staying above 10%. It just grew to 11%. That tiny growth in the percentage to me is a really strong signal because they're growing a bigger number. That means they're adding more than $2.3 billion of dollar revenue or currency revenue on the top line, which means they're going to, at a 30% profitability, you add $2.3 billion on your top line, you're going to get 30% of that on the bottom line, which is $750 million of additional profit. And that's going to extend to their cash flow. All those metrics in my mind look really, really good. I really like what I'm seeing out of Adobe, and I like the consistency. So PayPal versus Adobe, Adobe is a better option for me. They're two different businesses because PayPal is in payments. And if they can just get Venmo to be more successful, maybe PayPal will rise, but they got to start growing faster. So good question. All right. So what's the biggest company you think Adobe can make a contract? Well, they already have big company contracts. I think they listed them out in their earnings. I mean, the biggest companies, Microsoft, and Microsoft was listed as a customer. They had Accenture, which is a big professional services company. The biggest businesses in the economy use Adobe. So, yeah, and I think, comparing them to Excel or Word is, I wouldn't put them in the same category because everybody could use a spreadsheet or a word processing app, right? Like to write letters and stuff. But not everybody touches Adobe because not everybody's a graphic artist. Yeah, we'll see. I think the business is terrific. And what Warren Buffett would say is, buy businesses when they're discounted and buy under the conditions that are favorable to the investor. And I think this stock, along with, I've showed many examples where a company is just misunderstood. I'll show a quick example. And this one is very, very recent, and that's Google. When you look at Google, there was some stories that created fear in the stock. And you have the stock, selling off. It began to sell off in February, well before the big sell-off in late March, early April. And the stock really sold off. And in general, it wasn't performing up to the levels that their peers, the big Mag 7 stocks were performing at. But once we got the stories out of the way, for example, their cloud business is growing at 26% versus their rivals are growing slower. And of course, the Department of Justice story was kind of put to rest. This stock has been on a tear. Okay. This is Google Alphabet. So the market is, you can't take the market's emotional, roller coaster and use that as an investment thesis. We need to do our homework on stocks, see what we think the stocks are worth based on their growth rates, profits, free cash flows, balance sheets, make sure balance sheets are good, and invest at the right time. This was a great time, obviously, to buy Google stock. I was buying Google stock, and now I'm sitting on a really nice gain, and this sucker's gaining momentum. Well, that's what I'm talking about with Adobe is, the market has acted this way against quality businesses like Adobe, Meta. I could list out 20 companies that are very, very valuable. And the market has really sold them off on these stories. And more recently, Adobe's been sold off by 44%, while the business has been growing 10, 11% on the top line, keeping their profitability and keeping that high rate of free cash flow generation. So the market has a track record of, at times, selling off quality businesses and giving investors like me an opportunity to buy a quality business at a discount. So here's one more example. And I don't know how soon Adobe would rally, but I'm betting capital that it's going to rise, and it's going to rise, to $500 a share, $600 a share, because the market will recognize that, hey, these guys are growing. AI is not a threat. They're growing a little faster than before. They're doing things with AI that are very impressive to their customer base. So all those things look good to me. We'll see how it plays out. Monkey. Yeah. Well, I don't know if it's going to get 415, but we'll see. The market has been taking some stocks and just flying up, which is incredible. I don't know if it's going to happen in this case. So you're in Tesla. Yeah. Well, we'll see. Yep. I agree with that comment. So Robotica is also on fire. Robotica. I haven't. So that's a company, huh? So Robotica or robotics. Yeah, robotics have been really rallying. Is that what you meant? I don't think there's a Robotica. I was like, man, I haven't heard of that company. Maybe that's a cool name for a company. What's my prediction for tomorrow? I don't have one. Adobe surprised me every time. I don't want to say one thing because the opposite is probably going to happen. I'll just share my analysis and say, I'm buying Adobe, and I own Adobe, and I'm buying more shares. And if it takes a while for the stock to rise, I've waited out other stocks, and they're doing great for me. I've got a really nice set of stocks that resembled Adobe, resembled the situation, and now they're flourishing. So add this one to that list of stocks that I'll gladly put capital to work on. So you like AMD? Cool. A lot of investors like AMD. Yeah, I think PayPal has plenty of competition. I agree with you. I think back to Adobe. Adobe doesn't have like a big player as a competitor. I know that they have other smaller players that are competitive with them or are trying to compete with them, but there's only one big Adobe, and I think they take a good portion of the market share. They have advantages, and a lot of these creative people, graphic artists and so forth, they've learned the tool set on Adobe, and they don't want to let that knowledge go. It's not like, oh yeah, I want to relearn another product. Who wants to do that? You want to go up the learning curve again? No, you're like, hey, I'll just keep using Adobe. I could use another product, maybe save, 25% on my licensing, but I'm going to have to relearn that product. And can I do everything I can do with Adobe? There's a lot lost there. So I think having good stickiness in their market is one of the things that I believe Adobe has, and is one more reason to own the stock. I think they have a strong moat. So they're going to have an investor Q&A in October. Oh, cool. That might be interesting. You put a good idea in my head. That would be interesting to do. I have had a chance to ask questions on earnings call, but it was like rare, and it was small companies. These bigger businesses, they don't want to hear from the retail investor because they don't know what kind of questions we're going to ask. They may not be able to answer our questions. At the PE, do I consider them expensive? No, I consider them discounted because they're growing and they're very profitable. So typically I see like a 36 for a company like this, but they're at a 22. So I think they're discounted based on PE. Yeah, you're right. Cause I totally missed it. The PDF processing or PDF creator, you're right. It is like Word. Everybody needs the PDF creator because if you do contracts, you want to write it and then set it in PDF and then you're good to go. Yeah, you're right. Sorry about that, Mike. I stand corrected. All right. So, all right, I'm going to pick a couple comments, then I'm going to close out the live stream. Thanks everybody for tuning in. We had a lot of people attend and really good questions. So, yeah. So I think I answered all those questions. Ben 10, good to see you. Thanks everybody. So thanks for tuning in, everybody. I really appreciate it and would love to see you again. If you'd like to become a member of my channel, I've got different memberships, and this is an example of what I do in the analysis that I perform. I create a lot of videos. I also have member calls where we talk about stocks. And on the live streams, your name appears with special highlights. And on regular live streams, we analyze stocks that the viewers get to pick. And I pick the stocks that the members have, and we analyze them on live streams. So if that's interesting to you, if you want access to the tool set I just showed that I did the valuation, I share my model. You have to be an advanced member level to get access to the model. And if you would want like one-on-one time with me, a super investor or a platinum investor, you get plenty of time, and you could actually give me a list of stocks that I could analyze, do full research on, and get them back to you. So think about it. If it's something that'd be good for you, I think you'll benefit in a big way. And I would really appreciate your consideration. I know there's a lot of members on, so I just want to thank all the members. Thanks so much for making the last year super interesting. And I really appreciate all your input, ideas, especially ideas on stocks. We analyze, every month we analyze at least 20 to 25 new small caps. And some of those small caps are making me a lot of money. So thank you to all the members who come in and with the ideas of companies we should analyze. And we get to companies that are quite discounted and good opportunities. So thanks so much, everybody. So that's it, guys. Thanks so much for tuning in. That was interesting. I plan to do this again with other businesses and really appreciate your attendance. Good luck with your investments.